You know, trading isn't just about the tape, the ticker, or the charts. It's about the man behind the trades. I've seen 1,000 tickers and 10,000 traders, and most of them fail for the same 4 reasons. The same 4 horsemen that ride right through every market and trample every weak hand that dares to stand in their path. Today, we're going to talk about them, the 4 horsemen of trading failure. But before we saddle up, I want you to remember something from the previous video on the mental edge that wins trades, because what I'm about to tell you won't stick unless your mind is trained to see the truth. Not what you want to see, but what is. Now, the first horseman is hope. Hope is a sweet word, isn't it? It sounds innocent, almost noble, but in trading, hope is poison. The moment a man starts to hope, he stops to think, he stops to act. He looks at a losing trade and whispers to himself, "It'll come back." Have you ever done that? Watched a stock sink lower and told yourself it's just a shakeout, just a dip before the rally? I did that too in my early days. And it cost me plenty. A trader who hopes instead of obeys the market is already finished. The tape doesn't care what you hope for. It only tells you what is. Hope makes you hold losers, and holding losers is the death of every account. You've got to train yourself to cut a loss quickly, instantly, without hesitation. The professional does it by rule. The amateur does it by emotion. One survives, the other vanishes. And remember, this ties back to that mental edge we spoke of earlier, discipline of thought. You can't kill hope unless you build that mental control. The second horseman is fear, hope and fear. They ride together, those 2 devils. Fear of losing, fear of missing out, fear of being wrong. I've seen traders paralyzed by fear even when the market was screaming in their favor. You know what fear does. It blinds you to opportunity and magnifies every shadow on the chart. You see ghosts in every candle. You question your own signals, your own setups. Tell me, how many times have you exited too early only to watch the move continue without you? That's fear, my friend. It's the costliest emotion in the game. The market punishes hesitation. It rewards conviction. But conviction isn't guessing. It's the result of study, observation, and repetition. A trader earns confidence the same way a soldier earns courage through drill and discipline. You don't conquer fear by pretending it's not there. You conquer it by knowing your method so well that when the signal comes, you act without tremor. That's how I learned to trade. Not from books, not from theories, but from the pain of fear and the cost of hesitation. Now the third horseman, greed. Greed is more dangerous than fear because it disguises itself as ambition. The market gives you a profit, and instead of taking it when the time is right, you want a little more. Always a little more. I've seen men turn winning trades into disasters because they refused to take what the market offered. They were so eager to make a killing that they let the profit slip away. Ever done that? You see a good gain, but your mind whispers, "Hold just a bit longer. This one could double." Then it reverses, and all that paper profit vanishes like smoke. Greed makes a man forget that trading isn't about catching the whole move. It's about catching enough of the move. The market doesn't owe you the top or the bottom. It only offers a portion of the middle to those who know when to take it. When you've got your portion, take it and move on. Don't linger at the table after the meal's been served. Greed also seeps into how traders size up their positions. They bet too big, trying to get rich quick, forgetting that preservation is the first rule of speculation. A trader's job is to stay in the game long enough to see the next opportunity. You can't do that if you blow up on one bad swing. Every dollar lost in a foolish trade is a soldier you can't send back into battle. Protect your capital. It's your ammunition, your lifeline, your power to act when the moment is right. The last horseman, and the most subtle one, is impatience. This one creeps in quietly. You sit at your desk, the tape moving slow, nothing happening. You get restless. You start forcing trades just to feel alive. That's when the market humbles you, because trading isn't a game of constant action. It's a waiting game. The real money is made in sitting, not trading. I've said it before, and I'll say it again. It was never my thinking that made me big money. It was always my sitting. But you have to sit right. You have to sit while right. Have you ever caught yourself jumping into trades out of boredom? Maybe you tell yourself it's practice. But that's not practice, that's gambling. The best traders learn to love the quiet, to respect the time between moves. Patience is a weapon, and impatience is a trap. The market doesn't reward activity, it rewards timing. Now, these four horsemen. Hope, fear, greed, and impatience. They're not just enemies in trading. They're enemies in wealth building too. Because wealth isn't built in one lucky strike. It's built through consistency, through sticking to a tested plan, through letting your money work over time. The same discipline that keeps a trader from overtrading will keep an investor from overreaching. And that's where today's principle circles back to the lesson from the mental edge that wins trades. You see, this isn't just about charts or price action. It's about mental control, the trader's greatest weapon. Without that control, even the best system will crumble. You could have the perfect setup, the perfect entry, but if you let one of those horsemen ride into your mind, you'll undo it all. A trader's success is measured not just by profits, but by how he behaves when those horsemen appear. Do you obey your stops or do you hope? Do you act on your signal or do you fear? Do you take your profit or do you get greedy? Do you wait for the right setup or do you grow impatient? The answer to those questions will tell you everything about your destiny in the market. The truth is, most traders never even see these horsemen for what they are. They think their problem is technical, that they need a new indicator, a new system, a new guru. But no system can save a man who trades against his own nature. The market is just a mirror. It reflects the trader's own weaknesses back at him. If you want to master the market, you must first master yourself. And that's where most fail, because mastering yourself takes time. It takes pain. It takes humility. You have to learn to take losses the way a boxer takes punches. Not with despair, but with focus. You learn from the blow, you guard better, you adapt. The market isn't your enemy, your emotions are. So when you sit down tomorrow and watch that tape roll, remember, the four horsemen are always waiting. They don't show up with banners and trumpets. They whisper. Prophets favor those who obey signals, not those who hope for miracles. That line might sound simple, but it holds the very core of trading truth. Every man who ever stood before the tape had a choice. To follow what the market told him, or to follow what his heart wanted to believe. The ones who listened to the tape made money. The ones who listened to hope made excuses. And I can tell you from years of hard-earned experience, the market doesn't pay for excuses. It pays for obedience. A trading signal isn't just a mark on a chart or a moving average crossing another. It's the market speaking. The tape has its own language, its own rhythm. When it says, buy, it's not asking your opinion. When it says, sell, it doesn't wait for your comfort. A true trader obeys without hesitation, without second guessing, without the need for reassurance. He knows that hesitation kills profit faster than a wrong entry. You see, the difference between a professional and an amateur is not that one makes perfect calls. It's that the professional acts when his signal appears and exits when it's invalidated. Hope, on the other hand, is the sweetest trap in the market. It whispers comfort when you should be cutting losses. It tells you stories when you should be reading facts. Hope says, it'll bounce. The signal says, it's breaking down. And too often, the trader listens to the wrong voice. Tell me, how many times have you stared at a losing position and said, just a little longer? It can't go any lower. That's not trading. That's denial. The tape isn't wrong. Only your attachment to the trade is. The market rewards discipline. Every profitable trader I've known, every man who lasted through more than one cycle, shared this single trait: they obeyed their own rules. Their signals were sacred. When the setup appeared, they acted. When the stop was hit, they exited. They didn't argue with the chart. They didn't pray for reversals. They didn't invent reasons to stay in a bad trade, because they understood that the market doesn't bend to anyone's will. You must adapt to it, not force it to adapt to you. Now, some traders believe signals are meant to be interpreted with emotion, as if the market needs your belief before it can move. That's where they go wrong. The chart doesn't need your approval. It needs your attention. You can either obey the structure or get swept away by it. A trading signal is like a compass in a storm. It doesn't change direction to make you feel better. It points to truth, and your job is to follow it even when it leads through discomfort. That's the part most people can't stomach. Discomfort. Trading signals often ask you to do the hard thing, to buy when others are fearful, to sell when the crowd is greedy, to stand aside when your emotions are begging for action. And most traders fail not because they don't see the signals, but because they don't trust them. They hesitate. They wait for confirmation that never comes until it's too late. They trade from the heart instead of the head, and the market punishes them for it. When I first learned this lesson, I lost heavily because I ignored a clear sell signal. The stock had treated me well. Good profits, smooth runs, and I thought it owed me another one. The tape told me it was topping. The volume dried up, the momentum shifted, and yet I sat there, convinced it would turn around. It didn't. It collapsed, and so did my profit. That loss wasn't the market's fault. It was mine. The signal was clear. I just didn't obey it. I hoped instead of acted. That's the difference between experience and ego. Every chart, every signal, every entry and exit, they all come down to trust. Trust in your method, trust in your preparation, trust in your discipline. When you build a system that works and you've tested it through the ups and downs, you must surrender to it completely. You can't half trust your system. You can't follow signals when it feels comfortable and ignore them when it doesn't. That's how you break your own rhythm. And once that rhythm is broken, the market eats you alive. Many traders think that obeying signals is about mechanical execution, about turning trading into a robot's task. It's not. It's about emotional mastery. Because every signal you obey reinforces your control. Every time you disobey, you feed your weakness. The market exposes which side you're feeding. If you can't control yourself, you'll never control your trades. It's as simple as that. A trader who obeys signals builds consistency. Consistency builds confidence. Confidence builds longevity. It's a ladder, and every step depends on the one before. But hope breaks that ladder. Hope tells you to skip steps, to take shortcuts, to trade outside your plan. And every shortcut in trading ends at the same place. Loss. There's a strange thing about traders who fail. They often know exactly what to do, but they can't make themselves do it. They know their stop level, their entry point, their target, but when the time comes, they hesitate. The brain says, obey the signal. The emotion says, wait a little longer. And the emotion wins, until one day the losses pile high enough that the trader finally learns. The market doesn't care about feelings. It cares about action. You see, a signal isn't a suggestion. It's a command. The trader who treats it like advice will lose to the one who treats it like law. The charts don't lie, but the trader's mind does. It invents hope, it distorts reason, it creates illusions of control. That's why most people lose, not because they lack knowledge, but because they lack obedience to their own knowledge. A signal's strength isn't in how beautiful it looks or how convincing it seems. It's in the trader's ability to act on it decisively. You can have the best system in the world, but if you guess it every time it triggers, it's worthless. The discipline to act is worth more than any indicator, any strategy, any book. It's the dividing line between those who make a living from the market and those who donate to it. When you really think about it, the market rewards behavior, not belief. It pays the trader who acts on truth, not the one who wishes for luck. Profits aren't miracles. They're math. They're the compound result of obeying signals, cutting losses, letting winners run, and repeating that process without interference from emotion. That's the entire game, stripped of glamour and fantasy. The trader who obeys signals doesn't need to hope, because his hope is replaced by certainty in his own discipline. He knows that not every trade will win, but every signal obeyed brings him closer to mastery. Each obedient act sharpens his edge. Each moment of hesitation dulls it. The market doesn't require perfection. It requires obedience, A trader's greatest weapon is mental control, not a new indicator. You can pile your charts high with tools, paint your screen with colors, add lines, oscillators, moving averages, and still lose everything if your mind isn't steady. The truth is, most traders don't fail because of bad systems. They fail because they can't control themselves. I've seen men with the best information lose and men with the simplest tools win. The difference wasn't in their charts, it was in their heads. Trading isn't a test of intelligence, it's a test of self-control. The market doesn't reward the smartest man in the room, it rewards the most disciplined one. You could hand a fool a perfect system, and he'd still find a way to break it. Why? Because the system isn't the problem. The operator is. Every trader wants the perfect setup, the perfect formula that guarantees profit. But what they really need is the ability to follow a simple plan without breaking it under pressure. That's the hardest thing to learn, and it's the reason most never make it past their first few years. When I started, I thought knowledge alone would protect me. I memorized chart patterns, studied price action, read every book I could find. But the moment I took a real position, everything I'd learned vanished under the weight of emotion. The market moved against me, and suddenly I wasn't thinking, I was reacting. Fear took the wheel. I closed too early, or worse, I held too long. My strategy didn't fail, my discipline did. Tell me, have you ever done that? Promised yourself you'd stick to your plan, only to break it the second the trade turned red. That's not lack of knowledge. That's lack of control. Mental control is what separates a trader from a gambler. The gambler trades for excitement, for the rush of being right. The trader operates with calm precision, knowing that any single trade is meaningless without the discipline to repeat the process correctly. You see, the market is a mirror. It reflects your strengths and exposes your weaknesses. If you're greedy, it'll test that. If you're fearful, it'll press that. If you're impulsive, it'll punish that. The charts show you price, but the market shows you yourself. A new indicator won't save you when your emotions take over. No tool can protect you from yourself. A trader who can't control his mind will always find a way to sabotage his account. He'll move stops. He'll double down. He'll revenge trade. He'll do everything except what the plan says. And the irony is, he'll keep looking for new tools to fix a problem that lives in his own psychology. The weak trader changes indicators. The strong trader changes behavior. Mental control isn't about being emotionless. It's about not letting emotion dictate action. You'll always feel fear and greed. That's human. The difference is whether those feelings steer your trades or simply pass through while you stay focused. The disciplined trader has rules, and those rules protect him from himself. He decides how much to risk before he clicks buy. He sets his stop before he dreams of the profit. And when the market moves, he doesn't flinch. He lets the trade play out according to plan. That's control. Not prediction, not luck, but obedience to structure. Every trader talks about risk management, but few understand that risk control starts with mind control. You can't manage risk if you can't manage your own reactions. A trader who panics can't execute. A trader who hesitates misses his edge. The market moves fast, but the mind must stay calm. The best trades come from clarity, not emotion. And clarity only exists when your mind isn't cluttered by noise, fear, or greed. Think back to what we talked about in the mental edge that wins trades. This is where it connects. The mental edge is the foundation for everything else. You can have perfect setups, clean charts, high probability entries, but if your psychology isn't solid, all that analysis crumbles under pressure. It's not the setup that fails. It's the trader's nerve. Most people lose not because they don't know what to do, but because they can't make themselves do it when it matters. That's the difference between knowing and doing, and it's all mental. When I traded my biggest positions, it wasn't my system that gave me confidence. It was my control over myself. I trusted my preparation. I trusted my stops. I accepted losses before they happened. That way, when the trade moved against me, I didn't panic. I simply executed my rule. Because if you can't accept a small loss, the market will hand you a big one. And it always will. The market teaches harsh lessons to those who try to negotiate with it. Mental control also means patience, the ability to wait for your setup and not force trades out of boredom. The market doesn't care if you're restless. It rewards those who wait for their moment and punishes those who chase action. How many times have you entered a trade just because the screen was too quiet? That's not strategy. That's a lack of control disguised as productivity. The best traders learn to love the waiting as much as the winning. Another part of mental control is emotional detachment from results. A trader who ties his self-worth to his last trade will always be at war with himself. One win makes him euphoric, one loss makes him despair. That's no way to trade. You must view every trade as part of a long series, not a single event. You don't celebrate every small gain, and you don't mourn every small loss. You simply record, review, and repeat. The trader who can think that way doesn't burn out. He endures. Indicators, signals, setups, they're tools. But tools are useless in the hands of a man who can't stay calm under pressure. The market's greatest test isn't technical. It's psychological. Every tick tests your resolve. Every loss tests your discipline. Every win tests your humility. If you can't stay balanced through all three, the market will find your weakness and exploit it. Mental control is like a muscle. It strengthens with use, but it weakens when ignored. Every time you follow your plan despite temptation, you train it. Every time you break your rule, you weaken it. The best traders don't just build strategies. They build minds tough enough to execute them flawlessly. Because in the end, trading is 80% psychology and 20% execution. The charts only reflect what your mind allows you to see. So before you add another indicator to your screen, ask yourself, will this help me think better or just make me feel better? Most traders chase complexity because they don't want to face the real issue, lack of mental control. But the trader who learns to master his mind can trade a blank chart and still win, because his greatest indicator isn't on the screen. It's in his head. The market mirrors your character, not your charts. That's the truth most traders spend years avoiding. They blame the system, the broker, the news, the volatility, but they never stop to look at the one thing that never changes: themselves. The market is a perfect reflection. Whatever weakness you carry inside will show up in your trades sooner or later. Impatience, greed, fear, ego, they all appear on the chart, not as patterns, but as results. Every losing streak tells a story about the trader's habits, not the market's cruelty. You can't hide from yourself in the market. You can wear the mask of analysis, the armor of complex indicators, but the moment real money is on the line, your true nature steps forward. A man who's careless with his discipline will show it in his entries. A man who can't admit mistakes will hold losses until they destroy him. A man who needs to be right more than he needs to be profitable will die defending bad positions. Tell me, have you ever noticed how your biggest losses usually come when you break your own rules? That's not coincidence. That's your character writing its signature on the chart. Trading is the purest test of self-awareness there is. You can't talk your way through it. The tape doesn't listen to excuses, and it doesn't care about intentions. It reacts only to actions. You can't fool the market because you can't fool your own discipline. The mistakes you make are the mirror image of your mindset. A trader with patience and humility reads the same chart differently from a trader with fear and arrogance. The data's the same. It's the perception that changes. I've said many times, the market is impersonal. It doesn't love you or hate you. It simply reflects what you bring into it. Bring greed and you'll see traps everywhere. Bring fear and you'll see danger in every candle. Bring calm discipline and suddenly the chaos turns into structure. The market's reflection is as clear or as distorted as your own state of mind. In my early days, I used to think the market was unpredictable, almost alive, as if it had a mind that moved just to fool me. But it wasn't the market. It was me. My emotions distorted my judgment, made me chase shadows. When I was overconfident, I saw opportunity everywhere. When I was nervous, I saw risk in every corner. It took me years to realize that the market didn't change, I did. My perception was what shifted. The chart was only ever showing me my own psychology drawn in price. That's why emotional control isn't just a skill, it's a mirror cleaner. The calmer your mind, the clearer you see. The more unstable your emotions, the cloudier the reflection becomes. Have you ever had a day where every trade felt wrong, every signal looked uncertain, every movement seemed out of rhythm? Usually, that's not the market being strange. That's your mind being unsettled. When your internal state is off, you can't read the tape. The lines blur, not on the screen, but in your judgment. The same market that gives one trader a fortune can take it from another at the same time. That's not luck. It's character. The disciplined trader follows his plan, while the impulsive one follows his mood. The chart rewards one and punishes the other. The difference between them isn't intelligence or experience, it's emotional steadiness. A man who can control his impulses will last. A man who trades from emotion will always repeat the same mistakes. Character in trading means responsibility. The ability to face your own actions without blame. Every trade is your decision, and every result is your reflection. The moment you blame the market, you lose your power. Because the moment you make it the enemy, you stop learning from it. The successful trader never blames. He studies. He asks, what part of me caused this? Was it greed? Was it impatience? Was it fear? That question is where growth begins. Many traders chase the illusion of control through analysis. They think if they just learn one more pattern or add one more confirmation, they'll eliminate uncertainty. But uncertainty isn't in the chart, it's in the trader. The market is always uncertain, that's its nature. What changes is how you handle it. If your character needs certainty, you'll overtrade trying to find it. If your character accepts uncertainty, you'll wait for high probability setups and stay calm in between. The more I traded, the more I understood that profit is the shadow of behavior. You can't chase the shadow directly, you have to change what casts it. If you're erratic, your results will be erratic. If you're disciplined, your results will start to stabilize. The market rewards behavior patterns, not intentions. That's why you can't copy another trader's system and expect the same outcome. Because you can't copy his temperament. His system is built around his psychology, not yours. That's also why some traders excel in fast markets while others thrive in slow trends. It's not just about strategy, it's about character fit. The trader's personality must match his method. A patient man does well in long trends. A quick thinker may profit from short bursts. But if the method doesn't align with who you are, your natural impulses will fight it. You'll exit too soon, enter too late, or second, guess every move. The chart exposes that mismatch like a mirror exposing a crack. Think back to the mental edge that wins trades. That principle ties directly to this truth. The mental edge isn't something separate from your trading. It's the expression of your character under market pressure. The stronger your mindset, the cleaner your reflection. The weaker your control, the more distorted your view. When traders say the market tests them, what they really mean is it reveals them. Every market cycle brings new lessons, but the same mirror. In a bull market, the chart exposes your greed. In a bear market, it exposes your fear. In sideways markets, it exposes your impatience. You never escape that mirror. You only learn to look at it honestly. The best traders aren't the ones who eliminate emotion completely. They're the ones who recognize their reflection quickly and adjust before it costs them. A trader who ignores that reflection will repeat the same mistakes forever. He'll jump from system to system, thinking the problem lies outside himself. But the truth never changes. Your results are only as good as your self-awareness. The market doesn't lie, it only reports what you are. If your trades are chaotic, so is your mind. If your results are consistent, so is your character. The market shows you exactly who you are every single day. Mastering yourself is the only way to master the market. Every trader wants to master the chart, the setup, the entry, the exit, but few ever think to master their own emotions first. Yet that's where every real victory in trading begins. The market isn't your opponent. You are. Every trade you make is a contest between your discipline and your impulses, your patience and your need for action, your reason and your emotion. The trader who learns to control himself finds consistency. The one who can't ends up blaming the market for his own reflection. When I first started, I thought trading was about prediction, about being right more often than wrong. But it took years of losses to realize that being right isn't what makes money. Acting right does, and acting right isn't about intellect. It's about self-mastery. Anyone can read a chart, few can control the mind that reads it. Tell me, have you ever known exactly what you should do in a trade, yet done the opposite anyway? That's not lack of knowledge, that's lack of control. The mind knows, but the emotion takes over. The hardest skill in trading isn't technical, it's psychological. It's not seeing the setup, it's executing it without hesitation or fear. It's not knowing when to sell, it's actually selling when the time comes. The mind can be a trader's greatest weapon or his most dangerous enemy. Most people never learn that until the market teaches them in the harshest way possible, through loss. Loss isn't punishment, it's feedback. It tells you exactly where you've failed to master yourself.